Official data showed Friday that the world's second-largest economy shrank, down from the January-March period's already weak 1.4%. Compared with a year earlier, growth slid to 0.4% from the earlier quarters.
This
year so far, the international environment has been increasingly complicated and challenging, and domestically COVID-19 resurgence has been frequent and sporadic.
Pandemic controls shut down Shanghai, site of the world's busiest port, and other industrial centers in late March, fueling concerns global trade and manufacturing might be disrupted. Factories and offices were allowed to start reopening in May, but economists say it will be weeks or months before activity is back to normal.
The overall economic situation has been stabilized, and we realized a positive economic growth in the second quarter. In the first half of the year, the GDP increased by 2.5% year-on-year, including 0.4% in the second quarter.
Growth for the first half of the year was 2.5% over a year earlier, one of the weakest levels in the past 3 decades. China rebounded quickly from the pandemic in 2020, but activity weakened as the government tightened controls on use of debt by its vast real estate industry, which supports millions of jobs.
Domestically, the impact of epidemic is lingering. Shrinking demand intervening with disrupted supply, structural problems, combining with cyclical problems, and market entities are still in a difficult situation. The foundation for the sustainable economic recovery is not stable.
Independent economists take China's official data as a general measure. Though the precision of the figures is widely distrusted, China's infection numbers are relatively low, but Beijing responded to its biggest outbreak since the 2020 start of the pandemic with a zero-COVID policy that aims to isolate every person who tests positive.